Good afternoon and welcome to the Wall Street Crossover Show with Darren Sinden, who is market commentator at Admiral Markets, who coincidentally sponsor this particular session. Right, Darren, how are you today?
You're very well, thank you, Zach.
Have you recovered? Oh no, we've got the run up to the FOMC, haven't we?
Yep.
2 days of solid, gripping talk.
I think actually the decision's due tonight.
That's right, yes.
So we've got the calm before the storm, perhaps, as it were. And it's quite a bit going on in the markets, but you just get the feeling that most people have sort of decided to take a step back and sit on their hands ahead of the meeting. Plus, it's a bumper day for European earnings as well, so lots to digest.
Any dissenters you expect to be in the FOMC?
Yeah, I don't think this
group.
Yes, we're in the lower for longer camp, and I think there will still be plenty of people with dovish tones. I know Janet Yellen has probably been seen to be more on the hawkish stance, but no, there are at least one or two people, in my opinion, the governors, who will caution for patience rather than a knee-jerk reaction. Okay, well, let's go on to the data released over the European session that you were alluding to. Right. Well, in terms of economic data, one or two pieces that caught our eye. First of all, the German GfK Consumer Confidence Survey came out at 10.1. That's bang in line with both the forecast and the prior 10.1. So no surprises there. But my takeaway from that is we've been very flat over the last 4 reads. And so a whole quarter's gone by and consumer confidence has not improved in Germany. Hasn't worsened, mind you. But given that the ECB is looking for the recovery of the internal market in Europe to be driven by the consumer, and the German consumer will be at the forefront of that, that's probably not what they want to hear. Neither will they have been particularly pleased with the French consumer confidence number, which came out today at 93, a forecast of level of 94, and the prior read of 94. So in comparison to the German number, a lower number. And concern again for the ECB, what's going on at consumer level in the European economy, and to sort of cement that further, we had Spanish retail sales for June. This is a year-on-year read. They came in at plus 2.3%, so they're growing, but that was a third below the forecast number of plus 3.3%, and further still away from the prior read of plus 3.4%. What's interesting here, and obviously there's a great deal of seasonality in retail sales, is that the January 15 reading of 6.5% seems a dim and distant memory. So we peaked in January, and we've really been trending lower ever since, though some cause for concern there as well. Against that, in the UK, consumer credit for June, quite a bullish number here. New consumer credit of 1.22 billion in the month of June, ahead of the forecast of 1.1 billion, and again ahead of the prior read of 1.057 billion. Again, though, we're not able in this number to beat January's bumper read of 1.233 billion. Neither, of course, are we anywhere near the peak of north of 2.3 billion in a month in 2008. So some way to go yet before.
Well, yes, exactly, yes. Well, I don't know if that's enough to raise interest rates. The mood they're in the moment, anything is enough to.
Well, it's probably another tick in the box as far as the Hawks and the MPC are concerned. But I'd be more inclined to wait until we're well clear of the January figure myself. But
well, let's go on to the European movers.
Okay, it's a morning of contrasts in the world of cement and construction. Italcementi, which is ticker IT. In Milan, up 49.8% at €9.81. And why? Quite simply because German rival Heidelberg Cement has agreed to buy the business for around 3.7 billion euros or $4.1 billion, offering 61% premium to the previous closing price. It's bought a 45% stake now from a holding company that the Italcementi's principal shareholder, and will offer similar terms to other shareholders. So rip-roaring success there for if you were long Italcementi. Going the opposite direction, though, the recently merged Lafarge Holcim, that's ticker LHN in Switzerland, 65 francs 55 this morning, down around 5.6%, and Holcim profits have fallen 35% to around 263 million Swiss francs versus forecasts of around 389 million. And they said that the cement market was a challenging environment and that there was considerably lower demand in some markets. So these two companies have literally only just merged, and it
hasn't helped them.
Well, no, it does beg the question why Heidelberg Cement have moved now, why they paid such a significant premium to secure the Italian company. Anyway, we're obviously not going to get the answer to that question immediately, but it's certainly an area that I would be watching, probably watching to the downside, given those numbers there from Holcim.
All right, let's see if there's any more any M&A.
Well, there is, and it's in the specialty chemicals and materials sector. The Belgian company Solvay, which is SOLB in Belgium, is to buy Cytec Industries in the US, that's ticker CYT, for all in a price of around $6.4 billion, including some Cytec debt. The deal would put Solvay into second place in terms of the manufacture of composite materials for the aerospace industry. Interestingly, Solvay say that market is growing at around 10% per annum, so you can see why they want to increase their positioning there. The deal, if it goes through, will be worth around $75.25 per Cytec share. That's a 27% premium above last night's closing price of £58.39. Solvay stock is down around 3% at €124.10. They're going to issue some new stock in a €1.5 billion rights issue, and also some hybrid debt, another billion of hybrid debt there as well. Solvay took the opportunity to release their Q2 profits this morning, and they came in at €500 million, which was marginally ahead of the forecast of €499 million. Viewers might recall that this is the second transaction in the specialty chemicals and materials sector. In July, we talked about platform specialty products bidding for the UK's Allen around 2 weeks ago. So, 2 weeks, 2 deals. Probably not the last we'll see in that sector over the course of the summer and the early part of the autumn, would be my suspicion.
Okay, well, let's move along to the US data points. Okay,
well, as you alluded to at the top of the show, it's interest rate decision day in America, the FOMC meeting, second day, and the decision on rates will come up, I believe, 19:30 UK time. No change expected, but the statement obviously will be studied as to clues, as to timing and intentions. This is the meeting really before the summer break. Pretty much everything shuts down in the States, or at least gets quieter in the States in August. And
so they probably won't really say it. I mean, they're probably not going to say anything one way or the other, really.
No issue. I mean, Janet Yellen will probably, try and please the crowd as she normally does. And obviously then we'll have to wait till after Labour Day. And the other principal economic data point out this afternoon, pending home sales for June, the month-on-month number. The forecast is for a growth of plus 1% against the prior read of plus 0.9%. The little comment I'd like to make here is it's been a bumpy ride for this indicator, and just to put that into context, just over a year ago we saw a massive leap, a jump of 6.1% in June 2014. Then by January we were heading deep into negative territory with a read of minus 3.7.
Volatile, seasonal, etc., etc.
Very, very difficult to make sense out of an individual data point, but those June 14 readings seem a long way away.
Okay, well, let's go on to our movers and levels.
Well, now we're going to look at a sector close to your heart, starting with Twitter as a pre-market mover, $32.21. They stand pre-market down 11.9%. They had numbers last night. They beat on revenues, but user growth numbers very much disappointed the investors who really want to see growth. You'll recall, the Netflix stock flew when they could show a massive rise in international subscribers. Twitter hasn't been able to replicate that. And
I would imagine they might have reached a bit of a plateau there.
Quite possibly, and I think what investors will want to see is what innovations, if any, Mr. Dorsey can bring to Twitter now to try and encourage growth again and to make it perhaps more relevant to a wider audience. But it could be worse. It could be in Yelp. Yelp is a review site very popular in the US, or perhaps not so. 26.67. They're trading pre-market down 20.34%. They posted a surprise quarterly loss last night, and their chairman is to step down immediately. No real explanation given there. He's going to pursue other interests. I think the thing
obviously
here...
nothing which is including trying to get the share price of Yelp up.
Well, indeed. And I think the thing here is that they're failing to deliver on their IPO expectations. So if you were going to review Yelp, I think that's what you'd say could do better with a capital C. So they're down 20.34%. And then in terms of equity markets, a little bit better for choice here in Europe. So FTSE, we're looking at 65.50 as the downside level, plays 66.15 to the upside. The DAX is probably the best performer in the European market. So we're back to 11,125 on the downside, plays 11,255 to the upside. We saw good gains in the US last night. So 2085 is our downside level now in the S&P, plays 2098 to the upside. And in the Dow, 17,560, our downside level, plays 17,650 to the upside.
The US just looks like a safe haven, doesn't it?
For the moment, yeah. I mean, yeah, you know, that
away from China, etc.
Yes, absolutely. The dollar's always had that cachet of a safe haven, and even if it's bad news for America, people still put money into the dollar. I've never understood it, but that's the way that the world works. In terms of currencies, really all quite ahead of the FOMC. So 110.15 is our downside level in the euro dollar. It pays 110.82 to the upside. Aussie dollar, US dollar, no great change there, just a slightly tighter range here. 72.97 to the downside, plays 73.30 on the upside. Similar story in dollar yen, where we're 123.30 is a downside level, plays 123.85 to watch on the upside. And cable, a little bit better, and obviously took some heart from that consumer credit number. 156.16 is our downside level now, plays 156.47 to the upside.
Very narrow ranges there.
They are at the moment.
As you would expect ahead of the FOMC. Thank you, Darren Sinden, market commentator at Admiral Markets. And that's it for the show. We'll be back with the same experience this time tomorrow.